SuperTalk Mississippi media production.
Attention sellers, Mid-Delta Auction in Greenwood is taking consignments for the end-of-the-year auction. Friday, December 12th. Get max exposure. Call Will Jeffcoat at 662-299-2414 or visit mdauction.com. Consign now.
This is Gerard Gibert, and thank you for listening to MidDays here on SuperTalk Mississippi.
MidDays with Gerard Gibert is on the air. MidDays with Gerard Gibert is powered by C Spire. Power your home or business with C Spire Fiber. To learn more, visit supertalk.fm/C Spire. C Spire Fiber powers SuperTalk Mississippi. Get ready to go beyond the headlines and join a meaningful conversation with people from around the state. You're listening to MidDays with Gerard Gibert here on SuperTalk Mississippi.
Welcome into MidDays with Gerard Gibert. I am not Gerard Gibert, and this is not a repeat of yesterday, Rhino. Yesterday, I'm Willie's, by the way. That's Rhino. Yesterday, Gerard gets into a traffic jam because of an accident. I don't know if anybody was hurt. I don't know, but he basically said about 30 minutes before the show was to go on the air, he goes, I don't think I'm going to make it in time. Okay. And then this morning at about, 8:30, he gets a flat tire 2 days in a row. Now, Rhino, I used to date a girl, and eventually she stopped answering my phone call, and, she started giving me the old send me text message saying, I got a, thing with the family, and I got a thing with this. And then eventually I go, I think. But really, in reality, he did have a flat tire. He is okay.
I thought you were going to say she stopped talking to you because you called her flat tire.
No.
It's a Friday. You got to do something.
It's a Friday. You got to do something. But no, he had a flat tire this morning, so I'm going to host the show for a little bit, kind of like we did yesterday. We are supposed to be at the Ole Miss Banking Symposium hosted by the UM School of Business, and we're going to check in there here in just a little bit. We're going a pretty incredible lineup of people. We've got Mayor Robin Tannehill, the mayor of Oxford, and boy, is she busy right now. We'll talk to Dr. Ken Syree, who is the dean of the School of Business there, Business Administration. We'll also talk to Kathy Cranger, who is the president and CEO of the Florida Bankers Association. And this is important, the former director of the Consumer Financial Protection Bureau. There are more scams. There are more crazy things happening. There's 50-year mortgages there. I don't know if you've heard this, Rhino. This morning I was listening to a show, and they were talking about a 15-year car note.
Yeah, that's not a great way to go about running your finances.
I remember when a 5-year car note was like, that's impossible. Who would do that? Now it's 7 years. I've seen an 8-year one that's being offered. And this morning, I heard a story about somebody offering a 15-year car note. So we're going to talk to Kathy Cranger, the former director of the Consumer Financial Protection Bureau, about that. I mean, who benefits from that besides the banks?
I can see how it's sold because it's sold the same way those buy now, pay laters are sold. It's all in that psychology of you get the price as low as possible because, sometime in the 80s or 90s, they did a study and figured out that for the average person, once you hit an $80 threshold, it becomes physically painful. Like it triggers the same part of the brain as physical pain to spend that much money. And the farther you get away from that, the more painful it is. So I would imagine they're trying to get that car payment down as low as possible to try to get some sales going or something, but there's just one problem with that from a realistic standpoint is once you get to a certain point where you've made the car note so low, don't even worry about the interest on it. Like that's going to be a nightmare in and of itself. You're going to be paying interest through the nose, and you're going to pay twice or 2.5 times more for the car over the length of that loan than you would for the car itself. But when you have people buying cars that can only afford a certain amount per month, and you've got it down to that, can they really afford to maintain and run that car?
Yeah.
There's a certain breaking point there where
It's not like a house.
right. Like there are expenses in a house and there are needs in owning a house, but that house ain't going anywhere. The only thing that's going to happen to it is an act of God.
And it grows in value typically.
Right, and cars are depreciating.
The exact opposite.
And all it takes is one person not looking and, well, that's all she wrote. So if you're finagling your way down to a car note that you can afford that's exceedingly low, that's a lot of risk, because are they financially sound and stable enough to afford having a car note if the expenses of running that car are going to be more than the note?
It seems to me that the smartest thing to do is to figure out some way of lowering the price of a car, which means combating inflation. And that has not happened.
With cafe standards. you gotta get rid of the chicken tax. There's all kind of different things you can do, and I know those all sound strange, but Google them. It all makes sense. That's the reason why you don't have the little S10s. That's the reason we can't buy the little $10,000 Toyota bare bones pickup. It doesn't meet the regulations. It's not fuel efficient
because
enough.
In Europe and other, I've been to Europe, and those countries, you have those small vehicles that are, they're tiny and they're less expensive. And if you live in a place where you drive 10 miles every day, it's perfect for you.
And there are people out there that genuinely need a pickup, but don't need a full-size pickup. And that market is pretty much gone because it's not economically feasible to make them. The reason all cars are getting bigger is because there's more lax emission standards the bigger they get.
Yeah.
That's why SUVs and trucks have exploded. It's since the passage of those regulations. It really doesn't make any sense. You cannot make an affordable S10 anymore because of those regulations.
Seeing it in housing, too. I mean, I saw the average house of a price in the United States right now is, I think, $420,000. It's $500,000. Think about the first house your parents had, the first house maybe you had if you're older. How much did that house cost? I mean,
and the argument against that is, well, you make so much more. Look at how much more you make compared to what they did then. And that's when you got to get into, like, ratios. The price of a house for a couple buying it in the 60s or 70s was about 3 times your annual salary. Nowadays, the price of a house, 4 to 5 times your average salary.
Unbelievable. It's unbelievable. And it's on, look, it's a both sides issue. It's regulations on the Democrat side, and honestly, it's these tariffs on the Republican side. These let's just say it. A lot of them are dumb, and he's backed up on a lot of them. But you add those two together, and that's the reason why prices. Gas is cheap right now. I saw it. It was $2.37 when I was driving in this morning. But the price of everything else is skyrocketing. Walmart just put out. I don't know if you saw this, but Walmart just put out the price of a Thanksgiving meal. It's down 25%. What they don't tell you, though, is they took 6 common items off of last year's list. That's why it's down. So it's like bait and switch. I mean, the price is still expensive. I mean, if you've been to a grocery store recently, you've seen those prices. They're still expensive compared to what they were 3 or 4 years ago, or certainly pre-COVID.
Yeah, you got to go to pre-COVID to see normalcy, it seems like. Everything after that, the world's just gone crazy.
It has gone. Everything is so expensive, and I would be interested to ask this lady from the former director of the Consumer Financial Protection Bureau. It looks like to me nobody's looking out for the average American in anything nowadays, and the national politicians are so focused on Jeffrey Epstein that they don't concentrate on their own failings. All this stuff that you see in the news about Jeffrey Epstein and release the files, don't release the files, and all this emails and all this kind of stuff. I don't care. I'll be honest with you, I do not care. Because when I go to the grocery store, when I go to buy a new car or used car, which prices are crazy right now, I go,
thanks, Obama.
Yeah. I'm
Cash for clunkers really helped the used car market. It helped the dealers, didn't help the consumers.
It did help the dealers in a very. I remember I had a friend of mine that worked for a car dealer at that time, and it was they needed it at that time because of the Great Recession and everything.
But now a used car will cost what a new car cost 8 years ago.
The vehicle that I drive right now I've driven it for about 7 years. It has depreciated about $3,000 in 7 years because it's a big SUV, and I can sell it right now. I've got a bunch of miles on it since then. It's crazy. Anyway, all right, we're going to be right back. We're going to talk to Robin Tannehill, the mayor of Oxford. Boy, has she got a lot of things going on. When we return here on Middays with Gerard Gibert here in the Element Wealth studio.
Be all right. Everything's gonna be all right.
Hey, this is Bob, and if you're like...
This segment of Middays with Gerard Gibert is brought to you by Covington County Hospital in Collins, where your health matters.
We're rolling. Middays with Gerard Gibert.
What? This is so
Awesome. On SuperTalk, Mississippi.
Welcome back into Middays with Gerard Gibert. Gerard's not here. He had a flat tire this morning. Of all the mornings, he had to have a flat tire. This is one of the events that he really looks forward to every single year. It's the UM Banking Symposium in Oxford, but we are partially live there. We have Mayor Robin Tannehill from the city of Oxford there at Ole Miss. And Mayor, my wife and I were at Oxford the other day for the first time in a long time, and we both went to Ole Miss. We were driving around, and I spent about a decade at the school. I was a professional student for a long, long time. And I looked around at one point, and I told my wife, I said, I do not recognize this city. It has grown like a weed. And I just was astounded at the amount of growth that Oxford is seeing. What is it like on your end? I mean, are you just an influx of so much?
Yes, we are basically drinking from a fire hose most of the time. That is what we are doing in Oxford, Mississippi. But, you know, I've said it so many times before. We'll own Gerard's show and Richard's show and others. You know, in Mississippi, when your greatest challenges are the result of tremendous growth, you say thank you. And you get busy planning, and that's what we've done. We spend a whole lot of our time figuring out ways to be able to see this growth as an opportunity, but also to protect the parts of Oxford that we love and treasure. Last night was a perfect example of that. We got to turn on the canopy of lights over the downtown square last night, which is about my favorite night of the year. It's when we officially become a snow globe. And when I was first elected in 2017, I interviewed a lot of folks over the age of 75, and I said, hey, what is a memory that you have of your childhood in Oxford? What is something that is just, you know, that you think about as inherently Oxford? And so many of those folks that I remember in the 50s and 60s driving around the square in my parents' car, and, you know, it was back when you kind of had that ledge at the back window, and they said we would lay in that, and our parents would drive circles around the square, and we would drive under this canopy of lights. Of course, I didn't arrive here until 88, and so I didn't know what they were talking about, but I did a lot of research and we figured out how to do it. So we brought that back in 2018, and so last night was our eighth time of turning on the canopy of lights over the square, and it's just every time we do it, it's breathtaking, and it just reminds us. I looked around last night, and there were thousands of people that came and stood in the street for the lights to come on, and we do a countdown, and it was one of those times that you go, God, this is why I love this place. It really is. The sense of community and the tradition that we're still able to embrace while also encouraging growth.
I would imagine that's one of the bigger challenges, is trying to keep that character that the city of Oxford has. And it still, when my wife and I went on the square the other day when we were there, we still, had that feeling of this is a small town. Now, it's grown out, but it's still got that feeling. What's the biggest challenge that a rapidly growing city like yours is facing right now?
Well, infrastructure, both road infrastructure and water and sewer infrastructure. We've grown 102% since the year 2000.
Wow.
We are predicted to grow another 24% before 2030. However, we've grown 11% over the past year, so we're going to blow right past that 24% before 2030. Today, we've got 2,886 units under construction. That's today. Units can be either a single-family home or an apartment complex. We have 6,995 bedrooms under construction. That's that many more people that need to flush the commode and drive a car on the road. We spent more than $15 million last year on water and sewer upgrades because we are the biggest city in Mississippi about 5 days of the year on SEC football game days when we grow to over 300,000 people, and we've got to be able to flush the toilets for 300,000 people 365 days of the year.
Wow. It's incredible. Tell me, the Golden Triangle Development Link has been incredibly successful for that part of the state. Is that the model that this Northwest Regional Alliance with Lafayette, Tate, Panola, and Yalobusha counties is trying to replicate?
It is. I think that all of our counties complement each other and have different strengths that we bring to the table when we're talking about economic development. In Lafayette County, our unemployment rate is less than 3%. So to think that we are going to bring in a large manufacturer is not realistic. That's not what economic development looks like in Oxford, but it is what it looks like in some of our surrounding counties. And so how do we contribute? A lot of folks that would work in one of those counties, if we could bring in a large manufacturer, would live in Oxford and would be in our schools and, would look to Oxford as their health care provider and those kind of things. We use something called Placer AI now, which allows us to track the number of IP addresses in the city limits at any given time. And it's so sophisticated that it allows us to track also by natural habitat. So if it's a Texas IP address, but Oxford's their natural habitat, we can determine that's probably a student. So what we know is that we've got 28,000 full-time residents, 26,000 students on campus, but we have 90,000 in town every day. So we've got 40,000 people that are coming here to be our workforce. We are the regional health care provider for the north part of the state. They're coming here to shop, to dine, for lots of quality of life issues. And we love that we can provide that service. But, that alliance will allow us to each kind of promote ourselves and what we do best, and hopefully bring some large economic development opportunities for our region. We've got a new economic development director. O-Link is Oxford Lafayette Incorporated. Ron Miller, who was, of course, at the state level overseeing workforce development, and so we are so thrilled to have him back in Oxford. And he is just setting the world on fire here, and he is a master at telling Oxford's story and promoting the things that we do well and the different kinds of businesses that we could accommodate well. The university's training the workforce for many different high-tech industry jobs, and so that's what we're focused on right now.
We're talking with Mayor Robin Tannehill of the city of Oxford. She's at the Ole Miss Banking Symposium put on by the University School of Business. A lot of legislators listen to this show each and every day, Mayor. If you had to talk to them, what's the biggest need that Oxford has right now?
Well, they hear me say it all the time. I think that a lot of people look at Oxford and think, oh, Oxford's got it made. They've got all this tourism. They've got their property values continue to increase, and that is true. But it is hard to make numbers work when you need water and sewer and road infrastructure for 300,000 people and you only have 28,000 taxpayers. And an investment in Oxford is an investment in the economic driver for the north half of the state. And we serve a large majority of the state, whether it's students that are here from across the state, alumni coming to town, people that come here to work, so an investment in Oxford is really an investment in the state. And similar to these alliances, like we talked about with economic development, when one of us does well, we all do better. And the legislature has been so generous with us in providing funds for the 4-laning of Highway 7, and we are really excited. That project is getting underway now. We're having the groundbreaking on December the 2nd here in Lafayette County, and so I think the legislators do understand, and many of them have the opportunity to come to Oxford, and so they see firsthand the challenges that this type of growth presents, and we just need more money, guys. That's what we need. I need a money whip. I need a money whip. I can fix some problems if I had a money whip.
So you said 300 on a typical game day, and this is probably one of the biggest game days of the year, I would imagine, with all the things happening around the team. So
we expect this will be. We had a little over 300,000 for the LSU game weekend, and so we suspect this will be similar.
Wow!
And if
incredible.
the crowd that was in town last night is any indication, it may even be larger.
So on a Friday night, typically like that, and you want to go out to eat, where do you go?
My house. My back porch with a fire and a big TV.
You don't even try to fight it, right?
No, heavens no. That's a rookie move.
It used to be just when the students were in town, but it feels like that Oxford is growing so much that it's not even, even on away games, it's just the
you
town
just have
is so
to plan
packed.
well.
You just have to plan well.
That's what you have to do. You've got to make reservations way out. But yes, and we have new restaurants popping up all the time, and we're really excited about those new restaurant opportunities, dining opportunities. So we can accommodate huge crowds in Oxford and everybody get fed and be happy. But I'm probably going to be the one on my back porch on a Friday night.
Well, thank you so much, the mayor of Oxford, Robin Tannehill. An incredible story happening here in the state of Mississippi. She's at the UM Banking Symposium. Thank you so much for being on.
Absolutely. Thank you, Will. Have a great day. Hotty toddy.
Hotty toddy. We'll be back here in a moment here on Middays with Gerard Gibert.
From the
Attention, adoring fans! It's time for
Middays with Gerard Gibert on SuperTalk, Mississippi.
Hallelujah. It's Friday. Welcome back into Middays with Gerard Gibert. I'm Will East. We are going to go back to the University of Mississippi Banking Symposium here in just a little bit. But first, let's welcome in Caleb Sailors from SuperTalk Mississippi News to give us a little rundown of the headlines. And with the government reopening, Caleb, how does that impact SNAP benefits?
So now the state is working to give all of the November SNAP benefits to recipients. Earlier in the week, prior to the government shutdown being lifted on Wednesday, the state was saying, hey, we're going to give up about 65% of the benefits for the month of November so that people can have food. And, Thanksgiving's coming up as well. Mm-hmm. And so now that the government's reopened, the state's like, all right, be patient with us. we're going to roll this out as quickly as we possibly can, but this stuff just doesn't happen overnight.
Yeah.
The money doesn't just hit the account overnight. Like the AP wrote a really good story about, like, yeah, the government's open again, but is it really open? I mean, it takes a while. If you think it takes forever for Congress to get anything done, I mean, think of all these federal agencies getting people back to the office and getting things done. I mean, I know my significant other works for Social Security, and I mean, there's been backlogs there. There's things they had their hands tied during the shutdown, and now they're getting back to where they were before the shutdown and having to try to play catch up. That's going to be the case with all these other agencies. So yes, the Department of Human Services will be giving out the SNAP benefits, just all of them, but it's going to take a minute. So you may not see your money in your account immediately, but it's coming.
Gotcha. One other story that I've been paying a lot of attention to is this Lindsay Whitehead situation. Yesterday, you wrote a story, bond revoked for Lindsay Whitehead, trial date set for February. So what's going on there?
Yeah, Lindsay Whiteside is a former DeSoto County, DeSoto Central high school basketball coach, women's basketball coach, and a youth minister at Getwell Church in Hernando, former youth minister. Well, she is accused of having a sexual relationship with a female under the age of 15, or that was the relationship happened while the child was 14 to 15 years old. It was like an ongoing thing. Reports from court records show there were like 60,000 messages exchanged between the two.
60,000?
60,000. It was a pattern of malicious behavior, according to prosecutors. Well, on state charges, she got what DeSoto County District Attorney Matthew Barton and many others called a slap on the wrist. She got house arrest. 10 years, but only 7 to serve on house arrest, I believe. It was pretty much like, wow. I mean, people that are convicted of child sex crimes get 30 years in prison. There was a coach from Clinton Christian Academy that recently got a 30-year sentence, and I think 20 to serve on that. And so people were furious. And they found out that one of the school board members in DeSoto County had written pretty much a letter of endorsement of her, not saying what she did was okay, but that she wasn't this horrible monster, that she helped the board member's daughter, etc. And so that's what people believed steered the state charges. But now the feds have gotten involved, and she's facing federal charges.
Why is she facing federal charges?
So she allegedly on youth trips they went across state lines. And that's what the charge is transporting a child across state lines for sexual purposes. And so that's a different ball game now. You're not looking at, if found guilty, you're not looking at house arrest on this one. I mean, this is minimum of 10 years in prison on this. And so now, most recently, as of Thursday or Wednesday, I believe, the U.S. judge in the Northern District of Mississippi has revoked Whiteside's bond. She's no longer on bond. She was on.
I wonder how common that is for a non-violent crime.
Well, child sex crimes.
I would guess that would meet the...
Yeah, that's going to meet the criteria for sure. And transporting across state lines, because her job at the church, I believe, was to facilitate like sleeping arrangements, hotel arrangements, or lodging arrangements. And she was on these trips. And so, that's where they're like, okay, cool, this is federal now because it spans multiple states. But it's being tried in Mississippi. It'll be in the Northern District Court in the Delta where the trial will take place. And her trial will take place in...
And who's her attorney?
Faris.
Tony Faris.
Yeah, she got the big dogs representing her. But the trial's going to take place in February of next year. I mean, we got to go through mountains and mountains of discovery on this. But so she'll be behind bars until then. Previously, on Halloween, October 31st, she was given some sort of, not house arrest, but like a bond where she had to stay at home. House imprisonment is what they call it.
Yeah.
But that's been revoked. She's in prison now in Oxford.
Oh, my gosh. That whole story has just
and
really divided that community.
Michelle Henley is the District 2 District 2 board member on the DeSoto County.
Who was the chair?
She was the chair. Well, she got stripped of her position as the chair of the board, and now
still on the board.
Well, her colleagues are asking for her to resign. And those open meetings, the public has shown up in droves, holding up signs saying, protect children, not pedos. I mean, these people are angry.
Oh, my gosh.
The last public meeting, and this is all online. You can watch all of this on YouTube. We even I have it embedded on our one of our most recent articles at SuperTalk.fm, and you can see people show up in droves. And she was at this most recent meeting, and people were looking at her dead in the eyes. The victim's stepfather spoke and looked at her dead in the eyes, saying, "You guys got to get her off the board. She can't be here." Oh my God! It's not, and she's not resigned. She hasn't stepped down and hasn't indicated that she will step down. And so that's another controversy within the controversy. And apparently the church is all split up over this. I mean, it's crazy what happened in DeSoto County with this Lindsay Whiteside situation.
Unbelievable. And the other story I want to talk to you about is Morgan Freeman, Mississippi native and a person who is known for his incredible voice. Well, he is taking a legal stand against some artificial intelligence companies for cloning his voice.
Anytime someone gets to be the voice of God, you know that is a very important, influential voice, and glad to be able to call Morgan Freeman a fellow Mississippian. But yeah, he is taking a stand against AI. He's saying it's exploitative and manipulative how these AI companies are using his voice for ads, promos, videos, etc. And the specific companies weren't listed, and I'm still looking to find the actual legal filings. We'll be updated on supertalk.fm if we get that. But Jill Sanchez, one of our new reporters, wrote a wonderful story about this. But yeah, Morgan Freeman is basically saying, look, you guys can't do this. You're stealing my voice. You're stealing my content. You're stealing other people's voices. And he took it a step further. He called out Trilly Norwood an all AI actor. What is that? That's not even a real human being that's being put in, I guess, film and TV, etc. And he's saying this is wrong. Like, you're stealing human creativity. You're stealing the humanistic nature of all of this. But Morgan does seem hopeful and optimistic that this AI boom won't take the humanity away or human aspect away from film and TV, etc. He still thinks you need the human touch, the human creativity element of it.
It's pretty incredible because another Mississippian was kind of the first one to allow his voice to be recreated with AI. Rhino James Earl Jones, if I'm not mistaken, allowed
prior to his passing,
allowed the Star Wars franchise to use his voice for future stuff. Am I not correct in that?
Yeah, he signed over rights to allow them to voice Darth Vader. I don't know that.
I think it was just for Darth Vader.
Vader.
And I saw that Michael Caine, who was one of Morgan Freeman's colleagues in the Batman trilogy, the Dark Knight trilogy, rather, I saw a report that he's allowing his voice to be used by AI too. I need to verify if that's accurate, but that's crazy how there might be a split in Hollywood over the summer. Like, heck yeah, give me my money.
You know, when they had their strike, it's been, I don't know,
writer strike
2 or 3 years ago. Well, I guess it was Screen Actors Guild strike.
It was.
That was one of the big sticking points. Was not signing over. They were telling the movie production companies, especially for younger stars, we don't want to sign over rights to recreate us in AI because they want to keep humans actually employed.
Right. You don't want to lose jobs. And in all sectors outside of Hollywood, too, people are concerned about the AI boom. And here in Mississippi, we're kind of embracing it with these data centers, with our AI training initiatives.
Well, I don't know if you just heard our interview with Mayor Robin Tannehill, but they're using AI to basically track people to find out, how many people are going to be.
Right.
They're using AI with IP addresses and all this kind of stuff.
They might need to use AI for this weekend because Oxford, I know it's great right now for the banking symposium. Tomorrow is going to be an absolute zoo in the city of Oxford. And I'll be there, by the way, if you want to keep up with Ole Miss football coverage, I'll be boots on the ground in Oxford. A little shameless promo there.
And also, we got high school football tonight.
We'll be doing the Mississippi Farm Bureau Insurance Company high school football. I can't do it like Lance does. Sorry. We'll do the scoreboard show.
You mean the Mississippi Farm Bureau Insurance Company high school football scoreboard show?
Yes. You and Lance got it down pat. I'm still working on it. I'm just
the producer.
I've
said that so many times it's ingrained in me.
I'm just the producer, so I just get to go, that. But we'll have a ton of action.
Because it's all playoffs now.
We're all playoffs now. And one of the big storylines is the Ole Miss head coach Lane Kiffin, his son, is starting a playoff game tonight for Oxford High School. And then we've got tons of games throughout the state. But yeah, I would encourage y'all on all of our big SuperTalk Mississippi stations to tune into the scoreboard show tonight. Lance, Butch, Keith, myself, the team will keep you updated on everything that happens on the gridiron tonight and some big games going on.
Some big games. This is all right. So next week is the most fun week of the year in high school football because you have the best matchups.
Yeah.
This week's really good.
Tupelo and Starkville tonight's a good one.
Tupelo, Starkville, but next week's always my favorite week of the year. It's just something about it because you have a lot of games.
And you'll have championships for MAIS as well.
You'll have that. And high school football this year has just been insane.
Yeah.
We've had so many storylines. The Marshall County thing. We had the George County. I don't know if you saw the George County thing.
Yeah, they got there on Thursday and we're like, what the heck?
There's no game. They moved it to Friday. Nobody called us. We had a court ruling that said a player could play.
Yeah.
And, it's just all this kind of stuff going on. So, all right, Caleb Sailors, SuperTalk.fm.
That's right. And thank you for letting me part of this star-studded lineup today.
You're welcome. We'll be back with more here in just a minute on Middays with Gerard Gibert from the Element Wealth Studio.
Now's the time to get a...
Come on. Middays with Gerard Gibert.
All right, we are back
on Super Talk, Mississippi.
Welcome back, everyone. It's Middays. We are live at the Oxford Conference Center for the University of Mississippi, the annual Banking Symposium. We are pleased to welcome now Dr. Ken Syree. He is the Dean of the School of Business Administration here at Ole Miss, also serves as the Chair of Banking, the Frank R. Day Mississippi Bankers Association, Chair of Banking, and he, of course, is a professor of finance. Dr. Syree, always good to see you, sir.
Yeah, same here, Gerard. We really appreciate you guys having us, and it's been a great morning so far, at least for us.
Yeah.
Maybe not for you.
Had a little car trouble out there on the road, but I think we got that resolved, so we're here and glad to be here. Always look forward, Dr. Syree, to being with you guys at this event. It's one where you bring together so many different folks from across the banking and finance industry, and of course they learn from each other. As you know, the networking aspect of this, Dr. Syree, may be the most valuable takeaway.
Absolutely. The interesting part of this too, when we first started this years ago, it was, and we should focus on Mississippi and get our folks here so we can learn and make the state better. There's no question about that. But what we've seen over time is that banks have expanded into other parts of the country as well. So you'll have Mississippi banks going into Florida, Texas, and we've just recently had a big merger with an out-of-state bank buying Cadence, and so we've seen our footprint expand in the banking that goes on in our state. At the same time, we've expanded our footprint with our symposium. This is a record for us. We have people here from 21 states.
Wow.
And 2 foreign countries, so that's
exciting that you guys bring that here to Oxford, and of course at the School of Business Administration, the great work you and the team do there. So as a professor of finance and a professional educator in the higher ed in business, the government seems to keep changing all the regulations on us. How do you incorporate that and adapt to that in the classroom, Dr. Syree?
It's very difficult. I always said for years, especially if you teach banking or something like that that's heavily regulated, you're never at a loss for material because it literally can change. Well, yesterday, we had some regulatory changes.
Yeah.
And when the government reopened, they put out some new guidance, and it's just nonstop. And compliance is always an issue. And I liken it to a football game. The fourth play in, the refs come out and say, "By the way, we got a new rule you're going to have to deal with," and that's hard. It really is. And but that's why this symposium is very valuable.
Yeah.
Because you can discuss not only the things that you look ahead to, like AI, which we're talking about today, but also those regulatory changes and what we think is not only happening currently, but what might be happening and how that's going to impact the way that they do business. And it's just a nonstop issue, really.
There's a cost associated with that as well, right? In the banking and finance industry, I often say it's faith, confidence, and certainty. That's what drives investment, risk-taking, job creation, wealth creation, economic activity. If you don't have that warm, fuzzy feeling about the outlook for the future, you tend to sort of stay put, hunkered down, and just pause.
No, that's exactly right. You have to have confidence. You need confidence in several things. One, your internal people have to be doing the right things. For example, you can make, every bad loan was probably made in good times. No one loans money and say, "Wow, I sure hope we don't get paid back."
Right.
So, there's that element that you always deal with because individual things happen that cause a loan not to get repaid. But you can't predict the next recession. I used to have a saying that I'd tell my students. Maybe the economists don't like to hear this, but I say, the economists have successfully predicted 11 out of the last 3 recessions. So it's kind of the way they tend to roll. But they don't call it the dismal science for nothing, right?
Well, isn't it true that we always describe economists as needing 2 hands because they always give you a theory, an opinion, a projection, then it's, but on the other hand.
On the other hand, that's right. But, and to be fair, life is like that. It's very uncertain, and we just don't know what's going to happen. What you find out, of course, and this is true throughout my career and my academic side as well, we're really good at predicting things when everything works exactly like we think.
Yeah.
The problem is nothing works exactly like we think all the time. So it makes it incredibly challenging, but it also makes it, I guess, interesting. And that's what business people look at this all the time, too. You could create a product, and if the government comes out and says, well, this product is now illegal to sell, it doesn't matter how much you scream about it.
Absolutely.
You've got
so
real
true.
issues there. So these are things that people have to deal with all the time. And the banking folks, community banking especially has been around for hundreds of years, and they do such a good job because they are engaged in those communities. They're embedded there. They're providing value to their customers. They know them. They live there. They go to church with them. They play ball with them. Their kids play ball with them, whatever. And they know what's going on, and they've got the pulse of the community in their hand, and they can be a much better partner for businesses. And that's why I think especially community banking is valuable. And, it kind of went out of favor for a while, but I do think it's coming back. We've had some real movement in Washington to try to get more focus on community banking, and also the fact that bankers do a lot of good to help the local economy and businesses.
Incredibly valuable resources and assets in the local communities, no doubt. Community banks are.
Absolutely.
Dr. Ken Cyree, he's the Dean of the School of Business Administration here at the University of Mississippi. We're stepping aside for a break. Thank you, Dr. Cyree.
Thank you,
Yes,
George.
sir. We got Fox News, SuperTalk News, and Kathy Kraninger, President of Florida Bankers Association.
Hour of Middays with Gerard Gibert is brought to you by the Mississippi Business Journal. Visit msbusinessjournal.com. Scott Coopwood, publisher and president.
Welcome to the show that challenges you to think deeply, and look beyond political posturing. You're listening to Middays with Gerard Gibert here on SuperTalk Mississippi.
Welcome back, everyone. It is Middays. We are live today at the Oxford Conference Center for the University of Mississippi Annual Banking Symposium on this
Friday, y'all.
We are pleased to welcome now Kathy Kraninger, President and CEO of the Florida Bankers Association and former director with the Consumer Financial Protection Bureau, the CFPB as it is typically known. Kathy, thanks for coming on.
Thank you so much for having me, Gerard. It's
Yeah.
fantastic to be with you.
Yeah, absolutely. So, the CFPB, there's been significant changes that have occurred with that agency since President Trump was inaugurated. It created, of course, in the wake of the 2008 banking crisis, and it was one of those things where the Democrats who swept control of the government felt like we got to protect those consumers out there from these bad bankers. It just felt to me like, Kathy, that it did more harm than good, and now it's virtually being dismantled. What's the status there?
Well, it is fair to say you cannot underestimate the impact of the election last year on the CFPB, and certainly on, in the context larger of all of the things about how the government operates and what the role of government is in our lives and in society. So the president had a clear agenda, and he's carrying it out. To your point, though, I think it does go back to the financial crisis and the creation of the CFPB, how it was created, worth a moment on that. And you did have Democrat control of the House, the Senate, the White House, and they took ownership of this consumer financial protection issue, and they made it pretty clear, a new agency, they were going to make that the cop on the beat. That agency is, so insulated in its creation that you had a sole director who did not report to the president until the Supreme Court decided that while I was director. And that the funding mechanism of that agency is literally to write a letter to the chairman of the Federal Reserve saying, just give me this. This is the operating money I need for this quarter. Thank you. That is what I did. I mean, every quarter there was an assessment of what our budget needed to be. And so there were a lot of insulation created to that agency that, to someone who is an attorney, it feels fairly unconstitutional. And we're starting to see some of that come into effect. We can get deeper into it. There are so many directions to go with this conversation. But
what I recall, Kathy, once it was established and implemented, was just casual discussions with banker friends, including bank CEOs and executives, in particular in the community banks, which we have a large number of in Mississippi. We have a large number across the country, and they're so critical, so value to the communities that they serve, was that the CFPB had issued regulations to the point where they were hesitant just to conduct the normal business, right, of loan making. And we're always worried about something that would violate those regulations. And I think that hurt consumers at the end of the day.
I certainly feel that way. I think it's unfortunate that we had a situation where, for Republicans, I am a Republican, but I'm frankly first and foremost about effective government and what makes sense from a policy standpoint for the American people. But getting us to a place where, Democrats said, hey, protection of consumers is actually about paternalism. It's about us telling you what's good for you or not, and then making sure we punish institutions regardless of whether they're doing the right thing and somebody made a mistake. It's a minor ticky-tack violation, but we're going to really bring the hammer down on that. So there are a lot of dynamics with how the CFPB carried out its mission that continued to cause a problem. I mean, in terms of what are we doing here? And so I'd also say the direction of it was getting your hands around these institutions. There clearly was a direction from one side of having fewer banks, so we can control and commoditize their products and eliminate the relationship banking that so many community banks thrive on, and it's their business model, and it's frankly what's good for consumers. The opportunity for a small business owner to come in and say, hey, this is my idea, you know me, you know what I have in terms of collateral, let's move forward with this kind of a loan or credit or what is the right product for me. Flip that to, again, everybody gets the same cookie cutter process, and everybody's got to fill out the same stack of paperwork, and it's all documented, and it's all, and it's all the same, regardless of size, regardless of risk, regardless of anything. And that's easier to regulate. So if you're trying to regulate, of course, having a standard process is going to be what you'd want.
Yeah, but that interferes with the market dynamics. And look, we don't want banks out there making bad decisions, but the market usually dictates that they don't make bad decisions. It's not perfect in that respect, but that's also just a function of free markets. When the government steps in, I think often what happens is they just don't do anything for fear that they may cross over some line somewhere, and then the regulators come in and slap some penalty or fine on them, and they say, okay, we're never doing anything remotely close to that again.
Yes. No, I mean, getting back to common sense is definitely what we tried to do in the first Trump administration amongst the financial regulators, and what we're bringing back again. I mean, the last 4 years with the amount of regulatory overreach and just, I said it actually from this fantastic banking symposium we're sitting outside of right now, that they lost sight of the ability to give people some latitude, give some latitude, and you get to, again, this cookie cutter regulation, and the intent of things like Community Reinvestment Act, the intent of things like Equal Credit Opportunity Act, it is to create a fair playing field, but not to create all this bureaucracy and red tape that then undermines the very consumers you're trying to help. Yep.
All right, so a whole bunch of stuff's going on that in the financial industry, in the banking industry, with respect to fiscal and monetary policy. Any thoughts in particular, Kathy? I would have thought that we would have seen the 10-year to which mortgage rates and most consumer borrowing is attached to. I would have thought we'd have seen that fall below 3, but that just hasn't happened. Maybe once or twice it crossed it and went right back up. And now the market sold off yesterday because investors feel like that the Fed, not having received information from the BLS for the month of October, is not going to take any action with respect to the benchmark rate. What do you think about all that?
Well, look, I do think we do have government way too involved in the markets in general. So, and we are dealing still with inflation and a lot of uncertainty. Yeah. And I think it's a hard place for the Fed to be. I mean, we're just discussing it there too. With the president being in real estate and being a populist, he wants to see low rates. Yeah. But there is lessons learned here in terms of inflation and navigating and managing inflation. No doubt. We don't want to see that come back. So I still think this economy is strong, and I think we're in a good place. But, like coming from Florida, I will say one of our challenges on this front, too, is just the sheer interest of people to move to Florida and then the supply of housing and infrastructure. And so, there are headwinds against having lower rates, and some of the dynamics that we're dealing with in terms of cost have to do with just sheer supply. Yeah, absolutely. So 50-year mortgages. You got any thoughts about that? I've been hearing again this popular, idea of doing that. I mean, I don't know where I'll be. I don't think I'll be here 50 years from now. But the notion that it's a 50-year commitment or that you're going to stretch it out that long, I'm not sure who is the best product for. Gotcha. But it does get you back to fundamentally, what is the cost? What are the other factors? Let's look at things that we can control and supply. From my standpoint, I think I'm excited about some of the efforts to address supply challenges in housing as one of the probably more, there's no panacea, but one of the more important things to do to deal with the housing market. Yeah. I don't know that a 50-year product is the right answer from that standpoint. But in my view, if there's no government backing of that, if lenders want to do that and consumers are okay with those terms, let them do it. Sure. I think again, it being illegal, I take your point on that. Yeah. Again, let people. Well, again, don't let the government tell in a paternalistic way consumers what is best for them. Totally agree. Not every consumer's in the same position, and so thinking about that and having that opportunity is key. We got about a minute left here, Kathy, but there was lots of doom and gloom predictions about commercial loans in particular, right? That I don't think that came to pass. What does credit quality look like these days? Again, pretty solid. Yeah. I speak from the Florida perspective. I mean, we obviously pay attention to what's happening nationwide. Massive change in COVID that really did upset commercial real estate. But the market is correcting and finding ways to address it. Yeah. And even as you get to conversion of the housing supply challenge, looking at what is possible in terms of converting. So, there is opportunity there. And banks are taking, risk-based approaches to their portfolios and really looking at it. So we have not seen the catastrophic problem everybody was claiming might happen, though different cities are dealing with it in different markets are dealing with it in different ways. That was also the thinking about a year ago when we saw a couple of banks go down that just really made some bad decisions as banks at the end of the day. It wasn't a systemic problem as was thought. Yes. Appreciate it, Kathy. Thanks for coming on. Kathy Craninger, President and CEO of the Florida Bankers Association, former Director of the Consumer Financial Protection Bureau. Appreciate it, Kathy. Absolutely. Thank you. Thank you so much for having me. We're coming right back with Charles White. He's the Managing Director of Fixed Income Capital at Stifel. Stay with us.
And now, the talk that keeps Mississippi talking.
Now, on to the real part.
Dynamite! On SuperTalk, Mississippi.
Good lead-in music there.
Welcome back, everyone. That's right. Rhino's all over it. We're at the University of Mississippi Annual Banking Symposium at the Oxford Conference Center. That voice you heard is none other than Gordon Fellows. He's the president of the Mississippi Bankers Association. So, yes, it is true. I arrived a bit late because I did have a flat tire in the middle of nowhere on I-55, but just pleased and proud to be here. But I will say this, Gordon, the parking lot is full, so I had to park like in the back 40 over here to get in, which is a good sign. So you got great attendance this year, and from what I can tell.
This is a fun event for me because I don't have anything to do with the planning of it. I just show up. The folks that organized this, it's the second year in a row they had to cut off registrations. We can't fit any more people in the building.
That's awesome.
A lot of good energy around young folks interested in a career in banking. I think that's a really, really positive thing. So I appreciate the university for putting this on, and the alumni that organized this. I'm glad y'all are here to help draw attention to it, too.
Absolutely. Well, anytime we can get, I believe, the private sector and the educational community together and on the same page and in the same room and talking through the ideas and the issues and solutions and so forth, that's always positive.
Yeah. And I know you're good friends with Dr. Syree, who's been on. So he holds a chair of banking that was endowed by the Frank R. Day Foundation and the Mississippi Bankers Association 20-plus years ago. And before that, the Bankers Association made an annual gift to the university to fund the chair. So Ken holds one of the oldest state association-supported chairs of banking in the country.
I'm glad you told us
that.
It's
a really good history here.
So we should tell the folks who Frank R. Day was, right? You want to do that?
Yeah, so Mr. Day was the longtime leader and CEO of what is now Trustmark Bank, which was to a few months ago Trustmark National Bank, and is really sort of a known historical pillar of the banking industry in Mississippi. One of the sort of founders of modern Mississippi banking.
Yes.
So, and a lot of the Lucky Day Foundation that he's set up does a lot to support scholarships and student involvement sort of around all the universities in the state, or several of the universities in the state, which is really good. Really good legacy.
And Mr. Day, I can speak from personal experience, was a very hands-on banker.
Right.
And as a technology partner to First National Bank, often, Gordon, when I would just inquire nicely about status of payment on invoices, it was waiting for Mr. Day's approval himself. And sometimes I'd have to go down there and explain, along with his IT people, this is what we did. But fantastic.
Very
CEO,
conscientious guy.
Awesome, and did a great job building up that financial institution. So let's talk about the health of your members, the banks in the state of Mississippi. How they doing?
Yeah, good. I mean, it's there's some. Charles was just talking in the panel about the economy, about sort of this is one of the less clear economies we've ever been in, right? Some people think it's up, some people think it's down. We don't really know. We had a shutdown, so there's no data, but in general, I mean, the industry here has really sort of managed through a lot over the last 5 or 6 years and has come out really strong. So, we as a state are lucky to have the banks that we have that are focused on local development, focused on local customer relationships, and are very thoughtful in the way they deploy their assets to help grow the local economy. So a lot of good stuff happening around the state, economic development wise. The banks are an important part of that, and we're very lucky to have the industry here that we have.
I totally agree. Credit quality, how are they looking?
Really good on the commercial side. It is interesting, and I heard you talking to Kathy about that. By the way, how great is Kathy?
Oh, she's awesome.
Awesome to have.
So fortunate to have her here.
And the state banking associations work very closely together, so she's become a good friend, and we're glad she's here. But the commercial wise, I think everything's pretty good. On the consumer side, the Mississippi banks don't necessarily see this, but they're beginning to see some past dues on credit cards. A lot of the credit card banks aren't actually headquartered in Mississippi, so those past dues and delinquencies and delays sort of don't show up in the Mississippi numbers. But if you look at sort of the credit card numbers, you see a little bit of that. So there's some consumer pressure, and I think that has been building for several years now, right? We saw affordability. Inflation was really the driving issue in the last election cycle. Affordability is probably going to be one of the driving issues in the midterms. And so people at the consumer level have just been feeling economic challenges for a while now. We don't see that in credit quality at the Mississippi banks, but you see other signs of some of that strain and some other indicators.
Yeah. So Gary in the Berg on the C Spire text line says, make principal and interest deductible for home buyers will help mitigate the cost a bit, or dollar-for-dollar tax credit on interest for 10 years. Well, Gary, you can deduct the interest. There's some limitations on it. I think $750,000, as I recall. Yeah. So you can deduct the interest portion, Gary. That stays in place, and I think that would be destructive to our economy if we eliminated that tax provision.
Yep.
You can't deduct principal, of course, but you can deduct the interest. I don't know about a tax credit, Gary. I'd love to see that, but that would cause some problems for the Treasury, I believe. And you can now, under the One Big Beautiful Bill Act, the Families Tax Act, I can't remember the new name for it, but you can deduct automobile interest.
Yeah, to a certain amount.
To a certain amount.
Yeah, right, which is
some
great.
income thresholds, I think, on that as
and
well.
I think you and I had a conversation about this. There was also some important changes for the interest rates that lenders charge farmers in the One Big Beautiful
That's
Bill
right.
Act. And
Yes.
in a time when the farm economy is really getting squeezed, that was a good thing to see too. It's not going to solve the problem.
Yeah.
It does give lenders another way to help farmers.
You have any thoughts, Gordon, about, or what, more importantly, I think, feedback from your members about this proposal for 50-year mortgages?
Yeah, well, it's actually not something we've talked about a lot. The most striking thing I've seen, I followed Babylon Bee on Twitter X, and they tweeted out the other day that Dave, they're a parody. It's a parody, right? They tweeted out Dave Ramsey ended up put in the hospital with the idea of a 50-year mortgage, which made me laugh. I'm still laughing about that. But that seems, there would probably be some personal challenges for a lot of folks around that to get tied into something for that long. So something personally I don't really like, but it's not something we've taken a position on.
Okay.
Really dug into yet.
But if a financial institution wanted to loan money,
Sure, yeah.
right, to a mortgage borrower on 50-year terms, provided it didn't require some sort of government backstop where you would have to have government regulatory change, they should be able to
make
do
that a private thing, and especially if the bank wants to hold it on its books for 50 years, or that's. We've said for a long time when it comes to mortgages, if the bank's not selling off the loan, if it's keeping it on its portfolio, if the bank thinks it's a responsible product, the customer thinks it's a responsible product, let them do it. Yeah,
totally agree. Yeah. So anything you're hearing from your members with respect to macroeconomic conditions at this point?
Yeah, I think we're all interested to sort of see how the shutdown affected a lot of things, and there's not a lot of data to see yet. So, that's an immediate sort of concern or question mark. We'll get those answered. But, sort of big picture-wise, I think, if you kind of think about where the last 5 years have been, there have been a lot of ups and downs in the economy, and, it feels like generally things are pretty stable right now. Let's just sort of see where we are with unemployment as that data gets reported.
And no data for October.
Yeah,
and so I think that caused a big market sell-off because the investment community said, we don't know where we stand, and they feared that the Fed may say, okay, we don't have any data,
we can't cut.
We can't cut. We're going to stay put. And the markets, of course, went from, I think I saw the futures on that going from like a 68% probability of a cut in December to like down in the 40s or something. Now, right?
Yeah, and I think you got Charles White coming on later. Charles will have really good insight on this. He's a great mind in this space.
Anything in particular, Gordon, that you need from our lawmakers in Jackson with respect to the banking industry?
Yeah, so we're the NBA is preparing our legislative agenda right now. Fraud is a big problem and has been a big problem for several years. And so we're taking a lot of steps to we took some important steps last year around mail theft and stealing checks out of the mail. This year we're looking at some money mule containment ideas and some jackpotting ATM containment ideas. So we're still looking at fraud issues. Cyber liability is a big topic. We've had a bill on that got really close last year. And then financial literacy education, making that a graduation requirement is something that we and several interested groups have been talking about for over a decade. That got very close last year. It got a little tied up in the broader school choice debate, which is, I think, unfortunate. I think if all of the folks that are sort of engaged in educating kids realize now, and I think everybody does, it's really important that students come out of school with an idea of how money works.
Sure.
That's a good policy, and we ought to, as a state, try to get past the political disagreements to get that good policy done.
Yeah,
so.
and that's something, Gordon, perhaps that some of the executives that work for your members could also provide some instruction in the schools.
We have a program called A Banker in Every Classroom. It was just last week. I don't know the numbers yet. We've been doing that for about 15 years, and literally, thousands of students have had a chance to interact with local bankers. And what's cool is the local banker and the local teachers have sort of over a decade been building relationships. You get the same banker going into the same classroom as kids progress. It's a really good program.
Because so many, I was seeing a report on the way up here, hearing a report, I should say, about how many young people are using AI for to guide them on financial decisions. Not you should go buy this stock or that equity or security or something, but just overall but they're reporting that it's not necessarily working out right.
It is interesting. Part of this symposium is to talk about technology and finance, and so this afternoon there's a couple of really interesting AI panels that. I would not trust that right now as for my sole provider for economic advice. Go talk to a person. Go talk to a banker.
Absolutely,
we got a lot of really good relationship bankers around the state.
Appreciate it, Gordon. Gordon Fellows, president of the Mississippi Bankers Association. Thanks for coming on.
Thanks for having me. It's always good to see you.
You got it. We're coming right back with Charles White, managing director of fixed income capital market at Stifel Financial Corp. Stay with us.
From the Middays with Gerard Gibert. It is on SuperTalk, Mississippi.
Welcome back, everyone. It's Middays. We are live at the Oxford Conference Center for the University of Mississippi Banking Symposium, the annual Banking Symposium. We're pleased to welcome now Charles White. He's the managing director of fixed income capital markets at Stifel Financial Corp. Charles, always good to see you. Thanks for coming on.
Yeah, thank you. Glad to be back here. Hope you've been well.
Yeah, have been. A little car trouble on the way up, but we're here. We're good to go. Everything's settled in. So this is a great event, isn't it, Charles?
It is, and it's actually almost 400 people here now.
That's
today,
amazing.
Which is unbelievable.
Yeah.
That you take an industry like banking that, there are only 15 banking majors in the entire United States, this being one of them. It appears to be, maybe a dwindling industry in terms of interest, designing, CPUs seems to be more attractive to people. But each year this thing has grown.
Yeah.
And we get really good discussion. We've got a lot of technology heavy topics here today because technology is about to change banking. So it's a lot of fun, number one. And we see a lot of old friends and a lot of new people. There's probably 100 people here who've never been here before.
Okay. Wow.
Yeah.
That's awesome. All right, so give us your take on the macro economy. I always like to say that economists have to have 2 arms, 2 hands, because it's always, this is what I think is going to happen, but on the other hand, could happen.
I'll just put one behind my back. How's that sound?
I love it. And of course, a lot of people are plugged in to the various political parties that they align with, and the descriptions they give of economic conditions, there's like a Grand Canyon chasm between what they describe. What's your insight? What are your folks saying?
That was actually a topic of our discussion here just a few minutes ago with one of our Washington, D.C. guys at my company, and there has not been since I've been paying attention to this since the 1980s, really 81, 82, and we have never seen a chasm of opinion on where we are as an economy between the two sides, political or otherwise. But I think the rock solid truth is this. Number one, the top third and the middle third by earnings in the United States are doing quite well.
Yeah.
Both Wells Fargo and B of A, who run a decent slice of the U.S. economy through their balance sheets every day.
Sure.
Credit cards, checking accounts, you name it. They'll tell you that spending is continuing to stay strong. The bottom third, though, is lagging. You've seen some of the initial effects of that with the blow-ups in subprime auto and things of that nature. Now they were probably rushed forward a little bit, when immigration stopped and the demand for subprime auto slowed. But bottom line is the bottom third, their wage growth is not keeping up with inflation.
Right.
However, they're a small slice of the economy, smaller than their numbers. And so overall, we don't know, right? We're walking across a dark room trying not to bump into the furniture. We don't know what the economy is doing because the government reporting mechanism has been shut down.
Yeah.
It'll get lit back up here soon. We're probably looking at, if you believe the Atlanta Fed, somewhere north of 3% growth this quarter. Now, I also think that some of the beneficial effects of the BBB Act are going to be loaded into the first quarter of next year. So I got to tell you, I think 2 things are very clear. One is the economy is going to continue to grow.
Okay.
Ignore the stuff you see on social media about, oh, my gosh, credit card delinquencies are highest since they've been in 2008, right? Well, credit is the lowest it's been in 2008, credit standards. So that's not to be unexpected. But I do think that the economy is going to continue to grow fairly quickly, 2 to 3% this quarter, next quarter.
So I did a little research on the 3.8% figure for GDP growth annualized posted for the last quarter.
Yep.
And so it came across some data that indicated if we removed all the investment driven by AI, especially all the infrastructure investment, it's 0.1%.
Okay.
So now that's I guess kind of a hypothetical situation because you can't discount the fact that that's a major part of our economy now. But it seems like that's where the super high growth is coming from.
Well, if you eliminate the auto industry, it's probably negative, right?
I agree. I agree. But I think
how about closing bars? Maybe it'll be a little more.
I think it's a good news situation.
I think it is.
Because I think this is a revolution that's occurring. This is a transformational revolution that's occurring. And I think what gets missed out of that is all these initial investments to create all this foundation, all this infrastructure is benefiting those companies directly involved in that. We hadn't gotten to the part as much as we will where the other companies that consume that technology will benefit.
Exactly. I mean, granted, these are numbers that are shocking, truly shocking, when they tell you Meta is going to build a data center outside of Monroe, Louisiana that's half the size of Manhattan. So these numbers, make you suspicious because they're so large. But you're right. The first guy that gets employed, operates a track hoe, right? The next guy drives a cement truck. The next guy drives or makes the CPUs, that go into the data center.
Yeah.
And then, after that, perhaps those kind of tail off. But the increase in productivity caused by the usage of that technology gives you another boost. So I think it's a true statistic, right, that is icing on the cake, and the cake itself is a little smaller than you'd hope. But at the end of the day, that has recurring effects that are positive.
It's the only way, I preach this on the show all the time, the only way to create more wealth is to be more productive. When we produce more per hour of labor and man hour of output, that's how we get rich. I mean, that's how we create wealth.
Well, and to use a phrase that has gone out of fashion, your standard of living rises.
Sure.
Right? I mean, that's what everybody wants.
Why don't we use that anymore?
Well, look, I don't know. I mean, the people who elected Zoran Mondami, that's what they want.
That's exactly
just like you and I.
They just want to take it from one group and give it to another and skim off the top.
They're past the point of caring how they get it, right? They just want it.
That's right.
But you're right. And that productivity through the use of, think about an Excel spreadsheet. My son works in private equity now, and he is an Excel spreadsheet genius. And you think about what we did, because Excel spreadsheets came about in our lifetime.
That's right.
What did we do before? He can take an entire business, break it down into that spreadsheet, and run you a 10-year projection in a matter of hours. And that's not using AI. That's using, a spreadsheet. So those kind of things are going to continue to happen, and they're very beneficial for the economy as a whole.
No doubt about it. And that's why we've got to keep boosting this innovation economy.
Yep.
And I think it's a renaissance on us.
Totally. Now, we'll get a bubble, right?
Sure.
We may already have it.
Sure.
It'll get popped.
Yep.
May already be happening. Unfortunately, that pop bubble splashes soap on everybody, right? And some a lot more than others, and so you wash it off and move on. But think about it this way. Who is it? Cisco. Cisco stock just got back to the high of 1999 to 2000.
That's right.
Right? Well, the right thing to do was let the bubble pop by Cisco, and then the real long-term wealth is created. And that's going to happen here, too.
Driven by AI.
Exactly.
Being incorporated into more traditional network infrastructure.
Totally, because it is a game changer. It's one of the subjects here for banking, because if you take banks today, a great deal of their expense goes to employing people to conform to regulations. And AI will help make that a lot better. Now, before everybody starts lamenting the jobs that are lost, think about, I'm on the board of Bank Plus. Our total assets are almost $8 billion. We could go to $10 billion without an additional person with that kind of productivity.
Yeah.
So that's where I think the benefit is.
I agree. That's real wealth creation.
Totally.
That's
totally.
what that is.
Our shareholders are better off. Our employees
Customers
are better
off. Everybody's better off.
We're more efficient.
Yeah.
We can pay more for deposits, charge less for loans, all that.
Yeah.
And at the end of the day, I think that's where we're headed, which is
awesome.
very beneficial.
That's awesome. Well, You have any thoughts about, just ask Gordon about this, the 50-year mortgage that's being floated out there? Any particular ideas, thoughts?
Well, number one, it's obvious everybody's focused on the monthly payment.
Yeah, exactly.
Right?
Exactly.
And at the end of the day, you've seen the analysis. If 50-year mortgage versus a 30-year mortgage, you end up paying the mortgage holder quite a bit more money, right? So it's a long-term wealth drain.
Yeah.
It's a gimmick that doesn't help. And the market's probably going to have to charge a higher rate because that mortgage is going to have a longer duration.
Gotcha.
Right? So that's not a fix. The issue with housing, well, the main issue is the Fed stimulated way too long. They kept the mortgage rate artificially low after inflation was over 6%. All three of my kids got 3% mortgages.
Yeah.
I'm very thankful
Both of
for
mine
it.
got 2 and change.
Okay.
Yep.
Well,
Yep.
yours are smarter than mine.
Yeah, well, it's about a 2-day window, I think, in there, you know.
Better to be lucky than smart.
Exactly right.
But bottom line is there's a couple of ways to really solve this. One that keeps getting mentioned that I hope gets traction is to exempt capital gains on your house from taxation. You know, you get a $500,000 one-timer. Most people who have big gains probably hit that one-timer. But you do that, you unleash the supply.
Yeah, a lot of squatters.
Yes. Or another idea, which I hope they can do this. I think this would be great, but it's going to cause a lot of heartburn for some people, is make them portable. Take all your Fannie Mae and Freddie Mac mortgages and make them portable. Now, that's going to really cause a lot of whatevers.
Get some traction in the last few days.
It would help the housing costs.
Charles, when I was buying a house during the early 80s when it was 10 and 11%, 12% mortgages, you looked for that assumable mortgage.
Totally.
To get a 7% mortgage, you thought you would hit the jackpot, right?
And so those things I think would help. My first mortgage was 10 and 5/8. But the house price wasn't that big.
That's right.
Preponderance.
The combination of those two doesn't work.
No.
Appreciate it.
And lower rates doesn't fix it.
I get it. Charles White, Managing Director, Fixed Income Capital Markets at Stifel. Appreciate it, Charles.
All right.
Thanks,
you got
man.
it. Thank you. Good to see you again.
Coming right back. The yellow
Poly up of Mississippi.
You know what that means. Middays with Gerard Gibert.
We'll do it live
On SuperTalk, Mississippi.
I needed somewhere to hang my head without your news. You gave me something that I didn't have, but had no use.
Welcome back, everyone. It's Middays in Oxford, Mississippi at the Oxford Conference Center for the University of Mississippi Annual Banking Symposium. In the next hour, we've got Senator Nicole Akins-Boyd. She'll kick us off in the afternoon portion of the program. So, a lot of stuff going on, trying to get all settled in here. Something that caught my attention with respect to the expiration of the enhanced tax credits, premium tax credits for coverage purchased in the ACA exchanges, also known, by the way, as Obamacare. So typically when you hear the word Obamacare thrown out there, it references insurance policies that are purchased in the ACA marketplaces. These are commercial policies. They're offered by commercial insurance carriers. About 90 such carriers across the country do offer coverage in those exchanges, also called marketplaces. 5 in the state of Mississippi. A new report indicates, actually it was Commissioner Mike Cheney citing this report and appears to be in agreement with it, that some 200,000 Mississippians will drop their marketplace coverage. So of the 340,000, I think it's a little bit more than that actually now, last count, 350, somewhere in that range, of the total enrolled in the marketplaces in Mississippi, some 200,000, substantial, more than half, are just going to completely drop their coverage, saying that they can't afford it. And it's kind of amazing just how tenuous it is. And what I mean by that is there are folks that are saying, yeah, my coverage is going from $20 a month to $75 a month. And subscribers policyholders are saying they don't think they can afford that. Now, I'm not certainly here to question their personal finances, but just gives you a feel for how folks have gotten kind of settled in with these enhanced subsidies and returning to the subsidy structure prior to the enhanced subsidies that were enacted in the American Rescue Plan and then the Inflation Reduction Act under Joe Biden through 2025 are having this sort of impact. There is reports that, again, reference and describe certain individuals and their specific cases in the state of Mississippi. A 40-year-old living alone in Jackson making $30,000 a year, their premiums are going to rise more than $100 a month, from $42 to $155. They receive a $483 a month federal tax credit. So that's causing problems for people, just that small amount of money. And I don't feel like I'm in a position to question that. I know many out there saying, well, health care and health insurance is pretty important. You need to do it do without something else. And I get it, and I agree. And maybe they need to manage their finances accordingly. But that is what's going on right now. I was just shocked at the number, 200,000, the estimated number who would drop. And here's the problem with that. For those of us who do have commercial coverage, those of us who, of course, pay taxes, is that they're still going to get health care. They're going to end up in the ERs. They're going to flood the ERs. They're going to get treated for nothing. And the federal government's going to reimburse those hospitals under the emergency, it's called emergency Medicaid provisions. They're going to reimburse them. And then, of course, the healthcare institutions, the hospitals are going to say, we're going to have to get more money from those poor folks that actually pay for insurance. That'd be those of us who get it from our employer or purchase it in the individual private market. Our commercial premiums are going to go up to pay for the uninsured. That these are the people who would be dropping their coverage but still receiving medical care, just would be uncompensated to the provider of it. So this is a big old problem that is going to be, I think, an issue in the midterms. And then, of course, the president is proposing so-called Trump care, where he would replace the Obamacare ACA exchanges with health savings accounts that would allow individuals. It's unclear yet. The details haven't been released, whether or not they could use that money to purchase insurance or just, as is currently the case with health savings account, just cover their out-of-pocket costs. So we're not really sure, such as co-pays and deductible and co-insurance and other drugs and services that aren't covered by their policies. That's the purpose of a health savings account. So it's not clear if that would be the case. And people are saying, well, just send it to them and bypass the middleman. Well, the middleman is the insurance company in this case, but if you're going to use it to buy insurance, how are you bypassing the middleman? You're still using a middleman there, and most people can't afford all that health care expense on their own without other people picking it up through their insurance. Fox News, SuperTalk News next, because it's top of the hour. Senator Nicole Akins-Boyd kicks off Hour 3 next.
Get ready to go beyond the headlines and join a meaningful conversation with people from around the state. You're listening to MidDays with Gerard Gibert here on SuperTalk Mississippi.
Welcome back, everyone. It is MidDays. We are live in Oxford. The Element Wealth Studio has been relocated here for the UM Banking Symposium, the annual banking symposium. You hear a lot of background noise. That's because all the attendees are gathered up and sort of changing hats here for a minute. We're pleased to welcome now. They're moving about somewhere in this facility. Senator Nicole Akins-Boyd represents Mississippi's Senate District 9. Senator, always good to see you. Thanks for coming on.
Glad to be here.
we'll see if we can make all this work with all the folks around us. They're just moving in between the sessions, I think, right?
I think they are. Maybe headed to lunch even. So that may be what has the noise
It is. It's
going.
lunchtime.
Just a little bit. So.
I forget about that. Yeah. So, all right. Well, good to see you. Thanks for coming on.
Yeah.
Yeah, this is a great event, certainly for the city of Oxford, for the university, for the state of Mississippi, I believe. And we assemble all these financial professionals along with the great School of Business Administration, the dean there, Dr. Ken Syree. Of course, he's passionate about this event, does a great job organizing it. And it's just good to showcase the state of Mississippi. We got lots of visitors.
We do, and it's great to have seen this year after year grow. This symposium is great for the university. It brings in people from across the country, even from several countries, I think, are now here now. And you've been coming to this, I know, a number of
great
years.
Event. Yes.
And so we've all seen it grow to a really great thing. And they're here for an exciting weekend in Oxford. So the town is jumping right now.
Yeah. Great weather as well. Of course, as you know, big football game on tap tomorrow. So this town is going to be rocking and rolling. And it's good for the community, good for the state of Mississippi, the university. Everything's good.
Yeah, we're excited. So the town is packed right now. And we love seeing that. So I say, y'all come on.
That is so awesome. All right, well, give us an update. Well, we're, 6-8 weeks away from you guys gathering up down there under the dome of the Capitol. I can't remember that there's ever been, and let's say an off season, I'm going to call it, that time period between sessions that has been this active as it has this year.
It has absolutely, there was no break. We have gone, and that's what we've all kind of talked about. There hasn't been a break this year. We've all been going back, and always the third year of a session is a busy time because you're trying to go ahead and get those bills you've been working on for 2 years maybe, and you're trying to get all those hearings done and all of that. We're working straight up through December getting those done. I'll be having hearings with universities and colleges in December on the 10th and the 11th.
Okay.
Women, Children, and Families will be having a hearing on the 9th, the afternoon of the 9th. And we are locating in, I think we're keeping the Capitol rooms full, trying to get ready for session. But we've changed the way we kind of done business over the last 6 years than in prior sessions, is we try to get a lot of these hearings and a lot of things done before we get in there in January, and really kind of we want to get our homework done earlier.
Sure.
And I think it has made for much better legislation in the process.
Agree.
And we're always going to have some oops and things, but I think we've had a lot better process of doing that and been able to produce a lot smarter legislation when we have all those hearings beforehand and we really kind of get some of the debate out. It also allows for the public to be able to participate more in the process. And that's something we think is really important too, is because you're going to make a lot better bills when you hear from your constituents and how it impacts them in their everyday lives.
Well, I think the people would agree that when we get settled in, when the session starts and some 3,000 bills get filed and many of those just move through the process rather quickly, it's impossible for a member to review and understand all of those bills that might make their way to the floor, or even a committee, honestly, to a great extent. But when you can spend some time focusing on the key issues between outside the sessions and have the ability to analyze and dig deep and review and contemplate.
Well, and like for my committees, like we kind of know, like we've already set our agendas, of things that we're really interested in, and then we have members bringing us pieces of legislation. We're going to be able to have some of those hearings and flesh out, particularly if they involve state agencies, if they involve different people, we'll be hearing from them. And it also allows us really to consult with our neighboring states and states across the country to really see how, if they've done this, if they've made some mistakes on it. And candidly, there's some bills we looked at back in May after session was over, and we looked at them, talked to some other states, and we're not going to bring those up because they haven't worked well. So.
Well, I made the same observation when we created the lottery, serving on the lottery board. I tell people, well, look, if you're a fan of the lottery, the bad news is we're the 45th state to enact the lottery.
Exactly.
The good news is we got 44 others, laboratories that we can draw from to make sure that we create good legislation.
Yeah. So we're excited. We've got a really robust agenda that we're looking at, and the Senate is in education. We've already had 3 days of hearings on that. And then
I should point out you chair in the Senate the Universities and Colleges Committee.
I do.
Yeah.
And I'm also in education, and so we've had 3 days of really strong hearing of looking at what has worked in Mississippi, why we are where we are now ranked in public education, going to 16th, and then what are the issues that we very much need to address to continue to create a better education system. And so it was great. We had the Department of Education over there saying, okay, because for a lot of people in the Senate, that building of education happened over a long number of years.
Okay.
And so a lot of people that are in the legislature now weren't in there when they introduced third grade reading gate, when they put all those things in. And so them explaining why the science of phonics, why we went in to make sure that those things were happening. And so kind of dissected that back, and then that helped us kind of see where we go from here. So we've got a lot of legislation that we're going to be looking at in that committee. We've got a number of things we're going to be looking at. One of the things kind of applying to this here today with the Banking Symposium, one of the things we're going to be looking at in universities and colleges is really mandating financial literacy at the collegiate level. We know that we don't have some great loan repayment by many of our Mississippi citizens in looking at paying for college, and we need to do a better job of that. We know that their student debt is percentage-wise is a lot higher than it needs to be. And so we're going to be really focusing on universities and colleges, really educating them. One of the things always interesting when we go into industries is they always say that they need help with two things. And both of those we've talked about on this program before. The first one's childcare, and we've talked about that a number of times. But the second one that they always said is financial literacy. Because some of the times when people enter those plants, a lot of times they don't have really any knowledge of pensions, of credit card debt, and they are basically, they know that an employer that really understands their money is going to be a lot better employer.
Oh, yeah, no doubt.
And so we need to make sure that that financial literacy is integrated in our career tech programs at our community colleges and our certificate programs, but they also need to be at the collegiate level as well. So we're going to be looking at some mandated financial literacy in those programs as well. So, and we'll be having some testimony on that when we come to the legislature in December.
Yeah, well, all good stuff.
Yeah.
All right, so we passed legislation last year with respect to kind of an anti-DEI bill, I think is what we called it, that a judge enjoined. Where does that stand now?
The judge has it enjoined right now, and it is it has been put on hold by that judge. So we are waiting to see what happens with that. So I will say this, our colleges and universities right now are implementing a lot of those procedures. And
they're doing it anyhow.
They're doing it anyhow. And they need to with the federal government.
Yes.
I mean, that's what people don't understand, too, is that legislation was going hand in hand with what was happening at the federal level.
Orders were passed by the president when he got inaugurated.
Exactly.
Honestly.
So those things were all going hand in hand. So I'm always people want to say stuff, and you're like, you realize that we were working hand in hand with the federal government when that was going on with that. So, but yeah, most of our universities and colleges are already implementing this, and I've heard, and the thing is, it's still interesting to me that we have to have these conversations.
It's crazy.
Because, and this is why, when I was growing up and going through and went to university and then went to law school here in the state, the politics was kept out of the classroom for the
Right,
most part.
right.
Even when you were a political science major,
Right.
it was taught in, one feels this way, one feels that way, but quality professors really tried to have discussions, thoughtful discussions.
Make your own mind up.
Exactly.
It's what you should do in college.
Exactly.
Not be indoctrinated
Exactly.
in one way or another.
And, interestingly enough, the ethics, and I've taught at the collegiate level, and one of the classes I had to do is ethics, and that I taught in one of my classes. And, that's what ethics required at that point in time. So, it's interesting it's a shame to me because great professors know how to challenge thought and to do things with that. So.
Well, I hope our AG, we got to go, but I hope our AG would take action on part of the state.
She has been.
Okay.
Yeah, so they have been, and they're actively keeping us informed. That group of attorneys is, and really fighting to make sure.
Senator Nicole Akins
Yes.
Boy has been our guest. Thank you, Senator.
Thank
Appreciate
you.
it. Coming right back.
Check it out. Let's do this. The talk that keeps Mississippi talking. Middays with Gerard Gibert.
Let's get on with it.
On SuperTalk, Mississippi.
Welcome back, everyone. It is Middays. We are live in the Element Well studio set up in the lobby of the Oxford Conference Center. We're here for the annual University of Mississippi Banking Symposium. Pleasure to welcome now Rodney Hood, who has served as the acting comptroller of the currency, which, folks, if you don't know, is a really big deal. So we appreciate you being able to join us here. Rodney, appreciate it, man.
Thank you so much for having me. And yes, I recently served in the Trump administration as the acting comptroller of the currency. And what does that mean? It means that I, ladies and gentlemen who are joining us today, I got to oversee America's banking system. In 1863, President Abraham Lincoln believed that we needed a federal banking system that promoted safety, soundness, and fairness so folks could have access to their funds and to understand what they were having access towards. So the OCC has existed now for 163 years, and I was pleased to oversee the institutions there. There are over 1,300 banks that we were able to oversee. And I was there, you all. I wanted to pave a pathway for them to embrace financial technology, to embrace financial literacy and financial inclusion. How do they embrace the community banking system? In fact, sir, it was here today that I was able to speak at the Ole Miss Banking and Finance Symposium to say that America's banking system has never been stronger. They're sitting on strong capital. They have over $2.3 trillion in loans that are outstanding. And you're thinking, why would a bank regulator, former comptroller of the currency, care about loans that are outstanding? I'll tell you why I care. Because that $2.3 trillion in loans that are outstanding, it means that the banks that are here in this room today, they're making loans available for mortgages for folks around the country to have access to sustainable home ownership. They're helping those budding entrepreneurs and Main Street businesses have access to capital to grow and strengthen the American economy. They're also helping those hardworking men and women get the loans that they need to buy cars, to get them to and from work. So when I say that I'm excited about what the community banking system is doing, they're doing the work that they were cut out to do, and that is making capital available, sir.
Yep.
And they're really living up to all of the mandate that was created. And again, Abraham Lincoln created the Office of the Comptroller of the Currency.
So the question, the fine line, Rodney, that always has to be walked is enough regulation to ensure safety and protection of assets, but not so much that it impedes normal banking and financial activity.
Yes, sir. I have been in regulation now, you all, in several different administrations, and it's the mantra that I have said, and I now hear other regulators saying it. Regulation needs to be effective and not excessive. We need to make sure, yes, that there are guardrails that the banks can all follow and making sure that your deposits are safe, that they are looking at risk management when it comes to making loans and engaging in technology. technology, whether it be fintechs or cryptocurrency or stable coins. But, sir, you put it right on the head, and that is, it is about reducing regulatory burden. There are some government regulators and some different times here in America that you had regulators that wanted to do more rulemaking than they did regulatory reduction.
Right.
And when I talk about reducing regulatory burden, I'm not at all saying that we're going to take our eye off the ball of what's safe and sound and prudent. When we talk about financial regulatory matters being reduced, what we're talking about, and this is everyone from Scott Bessent, our current Treasury Secretary, you've heard President Trump also mention the need for there to be a greater focus on regulatory simplification, clarification. Again, we're not saying we're throwing away regulations. We're just saying it needs to be tailored.
Yeah.
The community bank that's in this room does not need to have the same risk protocols that JP Morgan or Citibank will have, because it's about proportionality. So what you're finding now is there's this right sizing in the Washington federal regulators. They're all saying we're going to look at material financial risk. We're going to look at what's important for today's 21st century institutions.
The concept, Rodney, the practice of for every new regulation that is promulgated, we strip away or we repeal some number, 5, 10.
President Trump said 10. For every new reg that is out there, he wants 10 to be repealed. And again, that is intentionality.
Yeah.
Again, you all, many of the bankers in this room, I gave a talk earlier, their capital level has never been higher at 14%. And by the way, we consider a bank well capitalized if they're hovering between 6 and 7. So they have double the requirement. So that means that they can take more risk proportionate to their risk tolerance levels. So that is what, again, if we introduce new rules, there may be some that need to be introduced, but 10 need to go away.
Yeah. Monetary policy. You have any thoughts about the current monetary policy that is in practice that's been implemented?
Yes. Well, I'm happy to see that the Federal Reserve is looking at opportunities where there can be the reduction in interest rates. Again, it's the interest rates. As those rates are lowered by our Federal Reserve, banks in this room can then pass on those savings to their customers. That means that $2.38 trillion in outstanding loans can maybe go to $3 trillion tomorrow. So, yes, I believe that the president has made it clear he certainly would like to see a monetary policy that really allows all of our communities to grow, thrive, and prosper. I think he has a number of folks, such as Vice Chair for Supervision from the Federal Reserve, Governor Michelle Bowman, who, by the way, spoke here at this very forum last year. So I'm happy to follow in her footsteps here this year. So you have her, you have Governor Mirren, you have Chris Waller, you have a number of folks who have all worked in alignment to ensure that monetary policy has one that embraces not only the reduction of interest rates, but also, as you know, the other Federal Reserve mandate is to keep inflation at 2% and under, but also to maximize employment, jobs. So I think we have the right components there. And as you know, sir, we're going to see a new Federal Reserve governor coming very soon. I don't have any insight as to who that person's going to be. In fact, I know that the administration and Secretary Bessent, they're all are interviewing candidates now. But monetary policy is critically important, especially to the functioning of our banking system. And I certainly support people who want to move in the appropriate direction.
As you know, they largely have two tools, and that's the Fed funds rate and then open market operations. With respect to the latter, are they following the path you think they should be right now? Should they be shrinking the balance sheet or blowing it up more?
You know what? As much as I wish I could answer that question truthfully, I have only been out of my political position for the past 6 weeks, and I am one that has never really been entrusted with the Federal Reserve under my portfolio. I'm the former chairman of the credit union regulatory body called NCUA. That's the National Credit Union Administration. I was chair of that under President Trump, vice chair of that body under President George W. Bush, and then it was President Trump who made me acting comptroller, and I did that role up until a few weeks ago. So all that to say, I don't want them second-guessing any of my policies, so we're going to let them choose what's appropriate for the American economy. But what I will say is they are in alignment, and I think the newcomers to the board will be in alignment with what the president and what Secretary Bessent wish to see.
Sounds good. All right, so from a regulatory perspective, in your experience, The banks in this country are pretty well managed, are they not?
They're very well managed. They wouldn't have the capital level that I just said. And again, you all, Tier 1 capital at over 14%. That means that they are managing their balance sheets. Even in spite of the interest rate risk that they've seen, they are still maximizing opportunities to lend. And by the way, when I mentioned that $2.38 trillion in loan outstandings for community banks, sir, that is without any diminution in credit quality.
Yeah.
We are starting to see a little uptick in delinquencies around auto loans and credit card lending, but that is just more of the market in general. It has nothing at all to do with some of the lending. So no, the banks have never been stronger, which is again why I think we can now looking at opportunities to reduce regulatory burden.
They got money to sell is the bottom line.
They do. They have money to sell, and in fact, we need to really unleash that.
Yeah.
Because they're now sitting on loads of capital, and that's why, as I told the audience earlier, that is why they can invest in new technology. That is why they can pursue stable coins and digital assets and cryptocurrencies, because they're operating in a position of strength. Now, I'm a glass half full person, as you may be able to tell from my personality, but at the end of the day, I would not be encouraging a lot of this forward-thinking approaches if they really had to stay and make sure that they were focusing on the bottom line. They are doing that masterfully, and that comes from great bankers that we have here. By the way, Ole Miss is one of the few banking schools in the country that's producing our generation of bankers, one of only 14 banking schools. So I think the folks that have all come from this program, they know how to run a bank, and they know how to do it safely and soundly.
Totally agree. That's awesome. It's been a pleasure. I really enjoyed talking to you. You're a delight. Your breadth of knowledge is impressive, and we appreciate you spending a little time with us today.
Well, thank you for having me on today. I certainly enjoyed speaking here live, coming from the 24th Annual Ole Miss Banking and Finance Symposium. For me, it's an honor to travel down and to really see people who are just like me, committed to strengthening our local communities. And the one thing I'll end on is I asked all of the young bankers in the room today to raise their hands, and I wanted them to know that I've been in the banking industry now for over 30 years. I've never seen a better opportunity for the next generation of bankers to enter into than to today. They're going to be able to use technology and tools to go deeper in understanding their local communities. They're going to be able to really make it even stronger than today. So happy to be here.
Great
God
insight.
bless you all.
Appreciate it, Rodney. Thank you. We're coming right back at the UM Banking Symposium at the Oxford Conference Center.
From the Days with Gerard Gibert.
Welcome to our shop
on SuperTalk, Mississippi.
Okay, now you have a good one. I may look like a city slicker, shining up.
Welcome back, everyone. It's Middays. Once again, from the Oxford Conference Center, we're here for the annual University of Mississippi Banking Symposium. We're pleased to welcome now Rebecca Romero-Rainey, President and CEO of the Independent Community Bankers of America, also known as the ICBA. Rebecca, thanks for joining us.
Thanks for having me.
Great event, as always, this is. And all these bankers come together and share their ideas, their insights, and many of them talk about with each other. Of course, that's the biggest takeaway. What's working well for them, what maybe isn't so much. Yes. Talk about their respective outlooks. Mm-hmm. But it's always good when they come together, especially in an academic, along with the academic aspect of things as well. The academic community heavily involved in this with Dr. Ken Syree. But what have you seen so far since you've been here?
Well, I think one of the things that's really different about the event is the engagement with students. And it's one of the things I personally love is the opportunity to not just gather the bankers that are leading the industry today, but to think about the next generation of community bank leaders. Yeah. And so that's fun. It brings another level of energy. Lots of questions, lots of engagement. I think everybody's trying to figure out where's this world headed, with whether we're talking AI, politics, digital assets.
The economy.
The economy, there's that. So many different possible topics for conversation.
Help the folks understand the distinction between the household names of Citibank and Wells Fargo and J.P. Morgan and Bank of America in the community bank that's down the street that they rely on. Tell us about that.
So I like to call it, in this country, we're blessed to have something that's really unique in the world when you think about the community bank footprint and the number of institutions that we have. Really what makes the community bank different is the business model. It's based on a local community. The success of a community bank depends on the success of the community and vice versa. And so it's an ecosystem that really is different. It's an ecosystem where the community bank is there for their customers, not just in the good times, but maybe even more importantly in the challenging times, because again, that's how the community gets through.
Yeah.
And so it's that long-term focus on the relationship, on developing businesses that go through the current generation, but are there, decades to come. And so it's that long-term focus, relationship, and engagement in the local community.
Yeah, and they serve a purpose in the market that it's different than many of these big banks serve,
Exactly.
right?
I mean, we need them all, but at the end of the day, as I think back on my banking career, whether it was how we keep the local pediatrician in town, or how you get this new restaurant started, or take a gamble on this new hotel. I mean, those are decisions that especially in smaller communities, aren't being made by the largest banks.
What sort of challenges and headwinds are community banks currently facing?
Goodness, there's a variety these days. I think one of not necessarily a new challenge, but definitely has evolved, shall we say, in terms of the regulatory environment. As we were just talking, what banks do, take deposits, make loans, happens regardless of the size of the institution.
Sure.
But the risk that you find in a smaller institution is very different than what you find in a larger institution. A lot of times, though, we're playing by the same exact rules of the road. And so trying to find an environment where we can proportionally manage that, and these smaller institutions don't have the army of compliance attorneys, to work through and create the scale that some of the other institutions do. I think another thing that we're working through is just, that concept of creating scale. As you think about technology, as we think about how we deploy the latest and greatest to our customers in an environment where maybe there's only a few customers that might be interested in it. So that concept of creating scale.
Yeah.
And then, of course, we mentioned the economic environment earlier. I mean, there's just so much uncertainty in terms of, what's around the next corner and how do we plan for that?
Which affects both, as you know, fiscal policy and monetary policy. And that's it kind of sets up as a black box that nobody can quite predict at this point, especially with just experiencing a month where we didn't get any data.
Right.
No jobs data, limited
and we
jobs
never
data.
will. I mean, it's kind of a blip in time.
Yeah. And probably we won't ever restore that. And that the Treasury Secretary talked about that yesterday, Scott Beston, and so did Kevin Assad from the White House, the Council of Economic Advisors, said, that's probably never going to happen. We're never going to see that information. Right. And the markets sell off because they say, well, that means that they're not going to be inclined to reduce rates because they don't have that information they need to give them the comfort that they can move along that path. The regulatory environment appears to have receded a bit with respect to the restrictions that were imposed by the prior administration and the current Trump administration. One of the first things they did, it looks like they're virtually dismantling the CFPB.
Yeah, I mean it's a fascinating dynamic. So to your point, one of the first things they did is tremendous layoffs of the staff at the CFPB.
Yeah.
Now we're at a point where the funding of the CFPB, the Trump administration has declared, I'm using my own words here, is essentially to be illegal, and so they're not going to request additional funding. So they are looking at running out of funds within the next month to two. And so, some may say, great cause for celebration. One of the questions I'm asking is, there's still a little bit of work we need to do in order to roll back some of the rules or fix or reprioritize some of the work that was done that without a staff there to do it, how does that work get completed? It's also interesting to think the CFPB per statute is the only agency that has authority for consumer compliance supervision at any of the non-banks and any of the banks over 10 billion. So literally by law, nobody else can do that. And so it's just an interesting question for all banks under 10
Never
billion.
thought about that. Where does the regulation come from?
Well, so
the oversight.
The oversight, it won't occur.
Won't happen.
Yeah. And so again, for most of the actors, it's probably not a big deal, but there's probably some bad actors out there that, at some point will need some level of oversight. But that does not exist in an environment where the CFPB does not exist.
Okay.
So, and the only way that'll change is through statute.
Okay.
Which requires Congress to act, which isn't necessarily the easiest thing because nobody really can agree, and it's a hard one to solve for. What should this look like?
And there doesn't appear to be an appetite among Republicans who currently are in charge of establishing any new agency or extending oversight to an existing agency at this point. It's sort of expanding government is not something they look to do.
No.
Yeah.
No.
Well,
so
that's
it's just an unanswered question.
No,
we'll see how it plays out.
That's great insight, though. Yeah, I hadn't thought about that. So, lots of predictions, though, Rebecca, not too long ago, especially with Silicon Valley Bank failing and other institutions kind of on the hook there. Lots of doom and gloom that never really materialized. Why do we seem to miss that? And lots of predictions about commercial property loans and debt. That might be under lots of pressure and collapse as well, but that doesn't seem to be happening. So, why are we missing those in our prediction models?
It's a good question. Thankfully those predictions were wrong. I think a lot of times maybe there's some sensationalism. In the event of a crisis, as human nature, we kind of make the most of it, and certainly some of the larger mainstream media didn't help with that.
Right.
I will never forget the hours I spent doing interviews after the SVB crisis when the headline read, it's a small bank crisis. It's like, come on, give me a break. They were the 16th largest bank in the country. The community banks are solid. They're strong. So it just, I think there was a lot of misinformation out there. So thankfully, that prediction did not come to be. The CRE is an interesting one with commercial real estate, especially as a country, we're seeing more folks, remote work, the downtown office spaces, and, depending on where you are, maybe aren't used as much.
Right.
At least from the community bank space, the CRE that we have on our portfolioes is owner occupied. I mean, it's, as a business
people
owner.
paying the rent, essentially.
And they've built this property out because they need it. And they're probably renting to, a couple other folks. And so it's just a very different dynamic. And again, goes to show, one CRA loan to another is it's not an apples to apples comparison just because they have that label.
Just a little while left, but the overall sentiment, is it optimistic among the community bankers, your members? Do they feel good about the future?
The overall sentiment, yes, is optimistic. There's a lot of questions as we think about, how does AI play a role within our industry? What does digital assets mean as we think about the advent now of a payment stablecoin? So there's questions, but at the end of the day, books are strong. We're seeing some great growth. We're
you got
seeing
great
demand,
capital.
great capital, and so we're in an environment where we'll figure it out and continue to evolve. And that's over 1,000 of our members have charters that are over 100 years old.
So these are entrepreneurs that built these banks, and
they've dealt with change a lot.
They're used to figuring it out.
Exactly.
To your point. Yeah, absolutely. Rebecca, appreciate you coming on.
Thanks
you
for
a lot.
having
That was
me.
a great conversation. Rebecca Romero-Rainey, President and CEO of the Independent Community Bankers of America, the ICBA. Appreciate it.
Thank you.
Yep. We're coming right back. Final segment of Middays from the Oxford Conference Center is up next.
Strong hands.
Properly set all controls before recording.
All systems go.
The talk that keeps Mississippi talking. Middays with Gerard Gibert on SuperTalk Mississippi.
I got a girl as sweet as can be. She wouldn't hurt a fly. When she hits that bottle, I see the difference in her eye.
Welcome back, everyone. It's Middays from the Oxford Conference Center. It's the University of Mississippi Annual Banking Symposium. Wanted to give a little shout out to my friend Tommy Turk, who is the organizer of Friends for a Cause, has an annual Squat and Gobble event. It was held last night at the Country Club of Jackson. It raises money to help the victims of human trafficking and domestic abuse. I was honored to play a little part in the event by interviewing, panel discussion style interview with Anna Leah Jolly, that's Miss Mississippi, and Chief of Capitol Police Bo Lucky. Great event, several hundred in attendance, packed house, raised some money. Also want to thank Scott Steele and the committee members and volunteers that work with Friends for a Cause. Really did a good job last night. Want to pass that on. Turkey prices are higher this year. This Thanksgiving, the media source Investopedia published an article yesterday on how you can save on your turkey. Wholesale turkey prices have surged about 40% because of the avian flu. Retailers are reporting that they're still offering deep discounts on turkeys. Expect to see Thanksgiving meal cost overall about 2 to 3% lower than last year, especially if you choose store brands in the preparation of your Thanksgiving meal. The American Farm Bureau Federation and Agricultural Industry Group said that wholesale turkey prices have, in fact, increased about 40% from last year due to broader economic challenges impacting the agricultural economy and a resurgence in highly pathogenic avian influenza and avian metapneumovirus. I think I pronounced that correct. That's a direct quote from the American Farm Bureau Federation. Interesting. Up about 80% are turkey prices 2018. I think the biggest surge, looking at the chart, the pandemic era shortages of the popular bird for Thanksgiving, where prices in 2022 and 23 really spiked quite a bit. And so the prices have moderated somewhat, but they're still high relative to last year. Shoppers at Walmart can purchase a Thanksgiving dinner bundle that serves 10 people for less than $40. Boy, that seems low. $40? Among the foods and ingredients, that would be dinner rolls, potatoes, fresh cranberries, and a Butterball brand turkey. They cost about 97 cents a pound. Kroger's Fresh Giving Bundle is what they call it. Provides dinner for 10 people for less than $4.75 per person. So I'd say that's good news. Price of turkey up, but the overall price of the dinner down just a bit. The CEO, speaking of Walmart, the CEO of the giant retail chain has announced this morning he's stepping down. That's after a decade. John Furner to become the retail giant's 5th CEO since founder Sam Walton created the company. Doug McMillan, he's been at the helm of the retailer through a period of significant growth for 10 years now, and he's stepping down. He announced that. I haven't checked the markets since I got on the air here this morning, Rhino, but they were down rather considerably in the pre-market, but they rebounded. I think last I checked, the NASDAQ was in the green a bit. The Dow was still underwater just a tad. And then the funny money is down. It's up for the year in the last few months, but it's down here of late. Yeah, the NASDAQ up 84 now, the Dow down 204. So this reveal by the president to unveil and replace Obamacare with Trump Care is really something that we got to keep an eye on. I think this is possibly could transform the health insurance industry, especially for those who obtain their coverage in the ACA exchanges. That could be a big dang deal. And we're going to keep an eye on that. I think there'll be more details released on that next week that we'll be watching out for. We've had a good day up here, except I had a flat tire on the way up and arrived a bit late, but we got the show in and enjoyed all the guests we had, enjoyed being here at the Oxford Conference Center. Great event, great people. We had a lot more to talk about when we get back in the Element Well studio on Monday. Until then, have a great weekend, everyone. Stay safe, and God bless.
SuperTalk Mississippi Media Production.